Good morning, everybody. This is Lisa Lashendro here with you this morning. I'm one of the annuity sales directors here at Insurance Agency Marketing Services, and I really appreciate your time in joining us today. Love seeing some names that I've seen before. So for those of you that are joining us again, welcome back. Love having you part of these webinars. And then I do see a few names here that are new. So for those that are new to us, and this is your first webinar with IMES, welcome. I hope to see you again on our next one. But today we're going to go through some of the highest cap rates in the industry. And I've got the pleasure of introducing you to John Williams from The Standard. John, you want to say hi?
Thank you, Lisa. I appreciate being here, and thank you, everybody, for your time today.
Awesome. So John's got a great presentation. He's going to go over, again, these S&P cap rates that, like I said, are highest rates in the industry right now. How they can compare to what's going on with MYGAs and where this product would be a good fit for. But I do have a few slides that I want to introduce you, remind those of you that are already working with us here at IAMS of the perks that you have being contracted and working with us and partnering with us. And then also, for those that are new and this is your first webinar with IAMS, I want to make sure you're aware of all the goodies you get working with us as well. So with that, I'm going to go ahead and get started. We are here to help you make money. We are your back office support. We are your right-hand man. We take care of the legwork for you so that you can do what you do best, and that's being in front of people. Whether you need us to help you get in front of people, whether you need us to help you on the service end, we literally can do it all. So that's really our goal. When you make money, we make money. When you succeed, we succeed. So it really truly is a partnership here at IAMS. And right out of the gate, when you contract with IAMS, in the first 6 months, whatever production level that you have made with us would be perks that you're going to get back, and we're going to put back into your business to grow your business. Whether that's at 100,000 in life or annuity sales, whether it's $1 million in life and annuity sales, let's say you hit that big case, we are going to make sure we're communicating with you, having good conversations with you to be able to put that resources back into your company or your business so that you're able to grow it. These that are listed here in the 100,000 or 750 levels are just ideas. It's just to give you an idea of what you would receive at those levels. You'll definitely be in touch with your marketing director, whether it's on the life or annuity side, and we will talk about thinking outside the box. Maybe you need, maybe it's, receiving 10 qualified leads. Maybe it's rebranding your logo. Maybe it's building you a new website, social media, whatever. We have our own creative team, which I'll talk about in a minute, that can assist you with all of that. So keep that in mind. If you have any questions on any of this, be sure to let your director know. Also, you love referrals. I don't know if there's a better compliment in our industry or in any sales industry, really, but to receive a referral. But what we are going to do, we're not just going to send you a thank you card. We are going to pay you for those referrals to show you that we really, truly appreciate that. Without you referring that person to us, we wouldn't have had that connection. But we're going to give that back to you in an override. This is paid out to you quarterly by our accounting. This is a check that comes directly from IAMS to you. It doesn't shave anything off of your referrals, street commission, or levels of commission. This is something that is literally coming out of our pocket and into yours as a thank you for referring them and helping us get that business. So keep that in mind. If you have anybody that you're associated with that you think would be a good fit for us, make sure you let your director know so that we can get that coded correctly for you in our system so that you do get those checks quarterly. I mentioned a little earlier, I think on a first or second flyer or slide here, our back office support. Our back office support is here. Like I said, we want you to be in front of people because that's what you do best. Let us do the back office stuff for you. So whether that is staying on the phone on hold, with a carrier, obviously not the standard because you don't have to be on hold with them long, right, John?
That's the aim, yes.
So we all know what it's like to have to, be on hold, wait for status on a case, or get a correct form, or maybe help with an illustration or something to that nature. You don't have to do that anymore because IMS is going to take care of that for you. We have an amazing new business team. Um, Amber Williams handles that team and she's on top of it. Her team is one of the best in the industry as far as servicing the clients to make sure that app is coming in good order. And at the end of the day, you get your commission paid a lot faster. You've got your directors here, your life and annuity directors here that will help you with any of the case building. We've got over 80 carriers, both on the life and annuity side. Trust me, we've got the solution for your clients. We also have our wealth management team that can help you on the security side. So I'm going to get to that in a second. But literally from A to Z, we can help you on the back office stuff. So utilize that resource. One of the other resources that we have here is our IMS Wealth Management, or I'm sorry, our IMS website. Getting ahead of myself. I encourage you all to, add this to your favorite on your browser, www.imsinc.com. Here you have term quoters, you have access to Annuity Rate Watch, you have access to forms, links, sales resource ideas, brochures, all sorts of goodies here that can assist you. And as well as those goodies, we have Firelight. Now, I'm sure John can attest to this, from a carrier standpoint, but when using Firelight, you are saving yourself so much time and frustration as well as the client because you're getting stuff in good order. You're not missing questions. You're having the correct forms. For anybody that is nervous about using an e-app type platform, don't be nervous. You've got your team here at IMS that will walk you through it. Amber, every single person on Amber's team and new business is completely able and has the ability to walk you through your first couple apps as well. So if you have any questions on Firelight, let us know. We got a majority of our carriers, including the standard that is available on Firelight. If you are, still kind of like in that wet signature and being across the, kitchen table with a client, you can still do that using this program. You just print out your app, get the wet signature and date, and then we upload that signature page, and then we submit it directly to the company for you. So we can still scrub apps, we can still completely e-sign it, and you can also do a wet signature. If you have any questions on this, ask anybody here at IMS. We're all perfectly happy and capable to answer those questions for you, but you won't regret it. And John, I don't know if you have anything to add from a carrier standpoint using e-apps, but
Not really, Lisa. I know that Firelight is really built for you, built for the advisors and producers. It's to make your jobs easier. It allows you to submit business a lot more cleanly, and all of the forms are right there. And it's really where the trend of annuity business submission is headed. And I encourage you guys to take a look at it.
yep, most most carriers love it this way because you receive the applications in good order. So I touched base a little bit when we were talking about our business builders, and the business that you write in your first 6 months, about our creative marketing solutions and our creative team. These guys are all in-house. We're not sourcing any of this stuff out. They're employed by us here at IMES. They're part of the IMES family. They're part of the IMES team, and they do a phenomenal job of being, coming up with crisp logo designs or attractive looking websites, helping you get your social media, whatever it is. Maybe you just want, help with some handouts, or, throw your name and your logo on one of our flyers. We can easily do all of that for you. So if you have any questions or ideas or um, things you want to discuss with any of our creative folks, just let your director know and we'll get that arranged for you. Also, contracting with IMES, you have access to Retirement Analyzer. This is a software that's developed for agents to do their presentations, keep track of their clients' information, easy to do renewal conversations with, showing them charts and pie charts of what their shortage is at retirement, or if they're on task or on target for the retirement. Any of that you can do on Retirement Analyzer. There is a cost associated to this, so we do request that you are writing business with us in order for us to continue this membership for you, but it is another perk that you get here with IMES. Okay, here's my peeps. I was mentioned a couple times our IMES Wealth Management team, and as I explain this to you, I'm going to do a poll here and launch if you want more information as I'm kind of giving you some feedback on this. But the cool thing about IMES Wealth Management is that they can be a resource whether you're a registered or non-registered representative. Whether you have your license or not, you can utilize IMES Wealth Management for your clients' needs. If you are registered, they have the back office support that mimics exactly what IMES is, and that's us doing all the back office and the customer service for you to run your business so that you can be out in front of clients and that do what you do best. IMES Wealth Management is going to do the same thing, where they help you with the forms and they help you get things submitted and they do all that back office stuff for you. And you get your paycheck a lot sooner than if you had to do it on your own. Now let's say you're not registered or don't have your securities license. They can be a resource for you as well. And the way that works is if you have a client that, let's say, wants to be in a securities product or a registered product and you don't have your license, well, if you refer them to Mr. Securities, buddy of yours down the street, and are you going to be guaranteed that that buddy isn't going to try to solicit them for life or annuity business or other business that you do? This is a way for you to control that business, control that client to stay in your own backyard. And if you did decide down the road, let's say 5 years later, you decided to go ahead and get your registration or get your securities license, then IMES Wealth Management is going to transfer that client back to you. No other agent or securities registered rep is going to do that. So I think that says a lot about their integrity and what they're willing to do. So if you have any questions specifically with IMES Wealth Management or maybe a client in mind or anything like that, just go ahead and answer yes here on the poll. And my buddy Zach or my buddy Duncan will get in touch with you. Next, we have our Life and Annuity Academy. This is something that we do a few times a year. We pay for all the expenses, your travel, your hotel, your food, your entertainment, everything for you to be in a 2.5-day training, schmoozing with other $1 million plus producers, hearing from some of the best in our industry, walking away with tools and ideas to grow your business. This is going to be more than just Insurance 101. This is going to be more on the advanced side of the spectrum. So if this is something that you're interested in learning more about, definitely want to make sure that you answer this poll. Let me get the next one. Sorry, I'm a little behind. launching this poll now. If the Academy is something that you're interested in, we are almost booked for the one that we're hosting here in June. But we, like I said, we'll do another one this fall. If you um, select yes on the poll, we'll be sure to get you the registration link and all that to get your name in the list there. We do have limited seats, as you can imagine, with us taking out all the expenses and take care of all that for you. And the level of expertise that you're going to be hearing from high-end folks in our industry and marketing strategies. This is definitely something that people fight for the seats. So I appreciate you answering the poll. Looks like everybody's answered. We also here we try to be the top of the top when it comes to our top producer summits, our top producer trips, and this year we are going to the Greenbrier. We're almost done with the qualification period. It ends June 30th of this year, and the trip will be in October. If you are one of the folks on here that's already writing business with us, you can always contact your director and see where you're at as far as being qualified for the trip, but this takes 4 million points. If you have any questions on this or would like to get more information, just give us a holler. I'd be happy to answer those for you. Obviously, we're a marketing organization, so we have Facebook and LinkedIn. Here is our Facebook and LinkedIn addresses. I do encourage you all to join us here. And with that, Mr. John Williams, are you ready for your part of the presentation?
I am ready, Lisa.
Fantastic. I'm switching it over to you. Now you guys got the opportunity to hear from Mr. Williams, which is what you came for. And I will shut up and let John take it off.
Thanks so much, Lisa. I really appreciate that intro and the good information. And for you folks out there, thank you for your time. I'll be very cognizant of it. I do want to share with you a brand new indexed annuity called the Enhanced Choice Index, and we're starting to see some pretty decent sales activity coming in. We just announced this or just rolled out this product in April. It's available in every state with the exception of New Jersey. We think New Jersey is going to be approved here soon, but this indexed annuity is built for accumulation. This does not have an income rider. This is built to grow your money safely and still stay and protect your downside. We're seeing some increase in interest rates. I mean, you can get 5-year MYGA rates. Ours is at 3.70%, so you're nearly up to 4% for a guaranteed 5-year MYGA. This indexed annuity is built to earn a little bit more and still enjoy the safety that any fixed indexed annuity provides. So it's called the Enhanced Choice Indexed Annuity. And I'm going to, we've got a 5, 7, and 10. Now keep in mind, this is a single premium contract, 5, 7, and 10-year contracts. We've added some indices. We've got a brand new index that we added, which I'll go over. This product is a participation rate only product. There is no cap and par option. It is only a participation rate. We've added some guarantees, which I'll get to in a minute too, but this allows you to lock in or guarantee your participation rate for 5 or 7 years. So we've always been known as a very client-friendly company in regards to how we build indexed annuities. Our renewal rates have always been consistent and competitive. This product is along that same lines as a very client-friendly annuity, and these are some of the points I'm going to highlight today. So in regards to our ratings, we've been around for a long time. We're one of only 11 life and health insurance companies in the country that have been able to maintain an A rating or higher from AM Best. And for the standard, it's been for 92 years. And that's as long as AM Best has been rating. So we're very proud of that, and I like sharing that information to you. And the company's got an over 100-year history. So product overview in regard to Enhanced Choice Index. As I mentioned, we're starting to see some sales, so I get a little better feel of how to position this thing from a sales standpoint. As I mentioned, we have a 5, 7, and 10. We've got 4 index choices, and this is kind of always what I consider the engine of any fixed indexed annuity. You'll notice that all of them are branded from S&P, from Standard & Poor's. So I think that makes it very client friendly. It's clean, it's concise. You're not having to explain a whole bunch of different indices from different fund families or management companies. So we do offer the S&P 500 index, which you guys have probably all heard of and know of. We've got the S&P MARC 5%, which is a low volatility option. The MARC 5 has been around since 2017, so it's got an actual track record of some success and is fairly well known in the industry, and I'll touch on that in a minute. We also have the S&P 500 daily risk control 5%, and this has been around since 2009, so it actually has a real nice track record of success. And we also are offering the S&P 500 ESG daily risk control 5%. Again, this is a low volatility, built for 5% volatility, but this is a brand new index that S&P 500 or S&P built. And ESG stands for environmental, social, and governance. And we are the first indexed annuity to offer this particular index. I'll highlight it in a minute, but we're proud to be able to offer it. I think that memory serves me, I think we are one of only 4 indexed annuity providers to offer an ESG index on a fixed indexed annuity. I think you'll see more of this in the future. You'll see more carriers adding an ESG option. Now, I remember I told you earlier that this is an index participation rate only product. We do have a fixed account as well. What is different is each of these indices we offer 2 different participation rates. We offer like a normal index participation rate, and we offer what's called an enhanced index participation rate, and I'll get to that in a minute. It's also protected by what we call a guaranteed minimum accumulation benefit, and this is a secondary guarantee. This is a money back guarantee after the end of the 5-year term or 7-year term. If any of the indices just are not performing as they should or have in the past, it's a protection where we will at least give you back your principal at the end of the term. We call that a guaranteed minimum accumulation benefit. So these are the surrender charge periods. We start at 9.4. We are approved in California. Those surrender charges are slightly lower per their rules. We do not have the 10-year available in California. So in regards to upside potential, this is really what it's built for. As I mentioned, it's an accumulation FIA. No income rider on this. We offer the S&P 500 index. All of you folks are going to be very familiar with the index. It's been around since 1957. Most, if not nearly every FIA in the industry offers the S&P 500 index. Real quickly, I'll note that the index itself, the last month or two, has gone down quite a lot. I think I read something that I think that it's the lowest monthly correction since like 2008. Okay, so why I mention this is if you're selling any fixed indexed annuity with the S&P 500 index as an option, I think this is a good time to take a look at the S&P 500 index, because your strike point or your entry point is going to be lower than it was a month or two ago. So I think that's worth mentioning. And if you're thinking of selling an FIA, I think that's a good thing if you look at the S&P 500 index. You'll also notice that this is just some return information. Over the past 10 years, the index has outperformed about 83% of actively managed funds in the United States. Again, this track record going back since 1957 is a good one. It's a good story. I want to pivot quickly, and I guess I should mention as I'm going through this presentation, if anybody has any questions or comments, please feel free to speak up, and I'll try to address them as they come up. So the MARC 5, as mentioned before, has been around since 2017. It's a low volatility index. There are several other fixed index annuity providers that offer the MARC 5%. It has performed. Actual performance has been pretty good since it was initially rolled out. This is a multi-asset diversification index. They look at equities, commodities, and fixed income. The equities portion is actually the S&P 500. The commodities portion is a gold index, and the fixed income portion is based on the 10-year Treasury futures. So they look at a multi-asset diversification, and they overlay a 5% volatility on top of that. They are able to, if it becomes very volatile, if the markets become very volatile, they are able to allocate into a cash portion, and this allows you to, again, smooth out any big spikes. This is what any low volatility index is designed to do. So Mark 5 has been around for a while and has been a good performer, and we're happy to have that. This information just has to do with some return information, which I'll go over a little bit of that in the future. We also have the daily risk control 5%. This is also a low volatility index from S&P. This one is actually very simple. That this is just the S&P 500 with a daily target 5% volatility overlay on it, an algorithm that just kind of smooths out the ups and the downs, and that's really what it's intended. So it's probably the closest low volatility index that we have to the actual S&P 500, but with the benefit of not having to deal with some of these large downsides like we have with the actual S&P 500 index the last couple months. And this is also the daily risk control. It also has a cash position if the actual index, if the S&P 500, if we're seeing quite a lot of volatility, they can allocate into cash as well. I will skip over this because we're going to go over some numbers here in a minute. Now, we have the brand new one, as I mentioned before, the ESG, which stands for Environmental, Social, and Governance. This is a low volatility index. We just came out with this. It's a brand new index, or S&P 500. S&P came out with it. It's quite unique, actually. As I mentioned before, we're the only fixed indexed annuity to offer this. And the way that it works is we will look at the S&P 500, all of the companies within the S&P 500. We're going to, or it's not us, but it's actually Standard & Poor's, are going to exclude companies like thermal, coal, tobacco, certain weapons manufacturers, companies with a low UNGC score, which is a score that S&P uses to judge these particular companies within the S&P 500. And then they'll take the bottom 25% within the global GICS industry, GICS. I think there are 12 categories within the GICS industry, and they'll rank them. They'll take out the bottom 25%, and that allows, by default, we'll take the top 75% that are going to be part of the index. And then they also add a 5% overlay, or they apply the algorithm that allows it to become less volatile. So basically, it is a vetting process. The S&P will vet each of the companies within the S&P 500. Then they're going to exclude those that don't make the grade, so to speak. And this is important to your clients. This is important to you guys as advisors. You have probably seen a lot of EFTs, variable annuities, fixed income products that invest or index based upon ESG. You've seen a lot of it in the news lately. You just have never seen it as an option on a fixed indexed annuity until now. So we're proud to offer this. It doesn't have any actual track record of returns. We've got some back-tested numbers, which I'll share with you. But it is a unique story, and it does resonate with quite a few of your clients, particularly if they're 40s, 50s, that type of age bracket. This is just the information I just went over. You can see it excludes some of the the companies that the tobacco companies, controversial weapons, thermal coal, so on and so forth. And these are some back-tested return numbers. I won't spend too much time on this here because we're going to be sharing some other numbers here in a second. As I mentioned before, this is a participation rate only product. It doesn't offer a cap option, only participation rate. Each index is going to have two participation rates, like a normal or a regular index participation rate and an enhanced index participation rate. Now, the enhanced index participation rate is a fee option. We will charge your client a 1.5% fee each year, which I'll go over in a second, but then that allows you to purchase up, in essence, a higher participation rate, which is going to benefit the accumulation value of the product. So as I mentioned, the 1.5% fee allows for that higher participation rate. It's going to help you grow the account value. What I really like about it, and this might be semantics, but I make sure to share it, is how we calculate that fee. We calculate the price of the fee at the beginning of the policy year, and then we charge the fee at the end of the policy year. So for instance, if you've got a $100,000 contract, we will calculate the fee, which is $1,500, and then we will charge the fee after interest is credited. So let's say you've got a 5% credited interest to the account. You now have $105,000 in your account. We will then deduct the $1,500 fee after that interest has been credited. So we think it's a very client-friendly way of calculating and applying the fee. I just want to make sure to mention that. Also, subsequently, the 1.5% fee that's contractually guaranteed, so that could never go higher. These are our current participation rates. I'm sorry, this slide is not super clear because we just recently increased our participation rates on the Enhanced Choice Index. You'll notice that, for instance, the 7-year, the S&P 500, using the S&P 500 index, the participation rate is 33%. Now, you'll notice that same index participation rate for the enhanced participation rate is 51%. That's where we would charge that 1.5% fee. The other three low volatility indexes range from 110 or 165. The 110% participation rate is no fee. The 165% participation rate is with the fee. Now, if you're selling a 5 or 7 year and you're allocating into any of the low volatility indexes, that 110 or 165% participation rate will be guaranteed for the term, and I'll explain that in a minute, but I really like that feature. And here it is. We call it the multi-year guarantee participation rate option. And you'll notice if you invest in any of the low volatilities, either the 5 or the 7-year term, that participation rate will be guaranteed for the term. So even if you're investing in the daily risk control and the Mark 5, your participation rate will never change. Or if you're investing in any of the low volatilities with an enhanced participation rate, and you go back into the, maybe you're in the enhanced participation rate for 3 years, and then you decide, that's not for me anymore, I don't want to pay the fee anymore. You can go back into stay in that index, go to another index, and that participation rate is still going to be guaranteed as it was at issue. We're not able to offer this option on the S&P 500 index. That's just going to renew each year, every year, like normal. And the reason why is because the price to purchase the underlying options is quite high if we were to guarantee the participation rate. So it's the S&P 500 is just too volatile, and those option costs are too high. You'll notice also on the 10-year product, each of the indices will renew 1 year at a time, as you're normally accustomed to. So this is truly a game changer for us, and we think this is going to be something that's going to benefit a lot of clients now and in the future. And it's so much easier to be able to offer a product that's got good indices with some good performance track record that are locked in for the term, either 5 or 7 years. You're not going to have to worry about renewal rates, and that's very important. These are just some crediting examples. S&P 500, these are going to be real assumptions, and I'm sorry, the participation rate and then the enhanced participation rate have not been updated just because and these are going to be, we've got higher participation rates. They just haven't been updated. So you'll notice that perfect example, the last 5 years, if assuming a 31% participation rate versus a 49% participation rate, which is the enhanced participation rate, you've got 5.6 versus 7.3. The 49% participation rate is net of fees, so that 7%, 7.3% return number is going to be net of fees. That's where the power of paying up for a higher participation rate is going to benefit the client. These are the same numbers with the Mark 5, or the same example with the Mark 5, assuming 100 and 155. Again, these haven't been updated since we increased those par rates. But Mark 5, as I mentioned, has been around since 2017. So any numbers before 2017 are going to be backcasted numbers. But again, you'll see, you see the benefit of the last 5 years, the last 10 years, and how that enhanced participation rate gives you a little bit more bang for the buck. Again, daily risk control, this has been around since 2009, so these are actual performance numbers. The enhanced participation rate is net of fees. Again, last 5 years, we've had a nice run up, and subsequently the returns, and I'll preface this by saying that participation rates are assumed to stay the same, 100% or 155 for the life of this grid. But remember that our participation rates do stay the same. They do not change if you're purchasing a 5 or a 7. And this is ESG, the brand new index that we're the first to market on. Similar type returns. These are going to be backcasted numbers, but it's going to be designed to give a similar type of return profile as the other indices, other low volatility indices, I should say. So in kind of getting up to conclusion here, I'm getting closer, but I appreciate everybody's time once again. We issue contracts up to $1 million. We are issuing quite a few of late, over $1 million, and in order to do so, we have a form that you fill out, or that you can fill out, or the client can fill out as much information as you want. It's just a one-page form. You submit it to us, and we get back to you within 24 hours of whether or not we can accept the cases over $1 million. But we've been accepting cases and issuing cases at $2.4 and $2.5 million of recently. So that's it, and that appetite for those cases over $1 million does change basically from week to week. But the last few weeks we've been issuing some quite substantial cases. I'll just mention quickly that we do issue joint owners and joint annuitants. So if you've got some incoming 1035 that are owned that way, there's no commission charge back on death for issue ages 85 and younger. I also mentioned this is an owner-driven contract, but one of the unique things that we offer is after the death of the annuitant, the owner can elect to withdraw within 180 days of death, and we're going to waive the surrender charges, and the client can walk away with their money. That's just some unique, very client-friendly thing that we offer and do, not only on this new product, the Enhanced Choice Index, but on all of our products. So we do allocate on the 15th of each calendar month. We purchase options on the 15th of the month. So if your money is coming into us, it's going to sit in the fixed account. And or if we've got several 1035s coming in, we're going to hold the money, we're going to hold the funds until the 15th, and they will be credited interest while the funds are in house with us. But I just want to make sure to mention that, and some advisors like to be able to time their entry into the S&P 500 or these underlying indexes, and we just allocate one time per month. One of the things that I really like that we do is we offer what's called partial index crediting, and this is something we've offered for years on all of our indexed annuities. But basically, the way it works, if you've got a midterm distribution event like terminal illness or a nursing home, if you annuitize, obviously if you die, you're not going to die in your policy anniversaries. But if this happens, we're going to look back to the last policy anniversary, and if that account value, or if that index, however you're invested, has grown, we're going to apply the participation rate, credit interest. The client, the beneficiary, is going to receive the larger amount. If the underlying indexes have gone down since the last policy anniversary, you're just going to get that last policy anniversary's account value when you annuitize or when the death occurs. So very client-friendly thing that we do. We've done it for years and years and years, and I'm not sure that I know of any other carrier that does that, that has partial index crediting like that. Obviously, you offer tax qualification options of all types. We've got a 45-day rate lock. The rate lock does not apply to the fixed interest account. The fixed interest account is guaranteed for 1 year after issue, and then we look at it twice per year in subsequent years. Now, our fixed account is going to be looked at again in July. I think that you'll very likely see an increase in the fixed account when we take a look at it. It could be either June or July. I can't exactly remember. It's sometime in the middle of the month. 10% withdrawals are available after the first year. It's RMD friendly. I mentioned those partial index credits that are available on the terminal medical conditions rider, nursing home residency, death benefits, annuitization, 30-day free look. I really like the partial index credits. This is the compensation for 5, 7, and 10. You'll notice that the 5-year is issued up to age 93. We pay full first year compensation to age 80. And we do issue the 7-year to age 90. So we offer options A, B, and C, but I wanted to share these compensations with you. So in recap, participation rate, fee, no fee. If you ask for the fee, it's going to be called the enhanced participation rate. So each index has got 2 participation rates. 4 underlying index strategies, all branded from Standard & Poor's, S&P 500 index, and 3 low volatilities. The ESG Daily Risk Control 5 is brand new. We're the first to offer it on a fixed indexed annuity. All strategies are uncapped, and I mentioned the ESG. Guaranteed minimum accumulation benefit. Why is this? Why do we offer this? If you think about it, if it's 100% original premium minus any surrender charges, of course, and we pay it back at the end of the term. The reason why we offer the secondary guarantee is because if you think about it, if you're paying a 1.5% fee to us to get an enhanced participation rate, and the underlying indexes, whichever one you choose, let's say you choose the Mark 5 and the daily risk control, and let's say they just tank. Let's say they tank for 5 years in a row or 7 years in a row, and and we're still deducting the 1.5% fee from the client's account value. Theoretically, at the end of the 5 or the 7 year or 10 year term, the account value could be less than what they originally started with. So if that happens, and there's a very low probability of it happening, but if it does, we're going to true up the account value, the client's account value, to the original amount, and we're not going to 1099 the client. Okay, so it's not considered an interest credit. It's considered a return of fees. That's another very client-friendly thing that we do. So no 1099, no worries. But again, it's a low probability event, but it could happen. So obviously we can, I may have mentioned this before, but you can annuitize at any time with no surrender. We waive the MVA. It's got the guaranteed minimum accumulation benefit, trail comp options, full first year comp to age 80, nursing home waiver, terminal illness waiver. So we think it's a really well-built product, and as I mentioned, we're starting to see some sales come in. We just rolled it out on April 1st. So if you have any questions or have any concerns or need some additional information about some of the indices, please call me directly. I'll put my phone number out there, 402-213-8626, or give me an email at john.williams@standard.com. You can call our sales desk. You can check out our producer website it's not password protected. So you can get all of our current rates, product training, so on and so forth. You can run illustrations on our website if you so choose. I will preface that Alabama, Colorado, Iowa, Maine, New Hampshire, Ohio, Rhode Island, and West Virginia are not available yet. They will be very soon. However, the product is approved in those particular states. The only state we're not yet approved in is New Jersey, and we're kind of waiting on them, which is how New Jersey does operate. So that'll happen very shortly.
Yep, and if you are in one of those states where you can't illustrate yet, let us know. We'd be happy to illustrate those for you in a very similar state so that you can still show your client what that illustration might look like.
Thank you, Lisa. And with that, that is the end of my presentation. I'll open it up for any questions or comments and hand it over to Lisa.
Awesome. Well, I'm going to do my last poll here today, guys. For those of you that may not be contracted yet with the standard, or have a client in mind where this might be a good fit for, or maybe you just want us to send you some of the materials, or any of these slides or something like that, if John is okay with that.
Sure.
We can get that over to you as well. Just select yes here and we'll be sure to take care of you that in that way. Other than that, looks like we are wrapping this up about 10 minutes early. So again, I want to thank John for your time and being here with us. All of you that have joined us and taken a little time out of your day to join us today, certainly appreciate that and value your time. And with that, John, thanks again, and I hope everybody has a wonderful rest of the day.
Thank you for your time, everyone. And thank you, Lisa.
You got it. Have a good day, everybody.